Welcome to the Australian Property Investment Podcast with your host, Aaron Christie David. Each episode, we ask an expert to share their key insights for aspiring investors to make confident property choices.
G'day everyone, my name is Aaron Christie David and welcome back to another episode of the Australian Property Investment Podcast. For those that haven't tuned in, as I said, my name's Aaron. I run a mortgage broking business called Atelier Wealth. The goal behind our podcast was really to answer a lot of questions that we were getting on a day-to-day basis. And we thought, right, why don't we take those questions and put it in front of an expert who knows best? And so each episode we bring into the studio what I call best in breed. So someone in our respective professional in their industry who knows the ins and outs, and we can really just go straight to the heart of the questions and hear from them. And today's guest is a wonderful guy. And I say that, we get a lot of wonderful guests in here, but you are a true gentleman. And I'm pleased to introduce Craig Bigelow from True Pride. G'day, mate.
G'day, mate. Very, very kind intro.
Not at all. Not at all. You're almost blushing there because
I'm blushing.
You are, mate. But and you're not. I won't say you're not because you're quite humble from what you've achieved. But just having a chat is so easy, and that's why I think you've probably had the success that you have, because it's not sales, it's care, it's service. And for those that don't know what Craig does, you're a planner by background, but specialist in risk insurance, and that's the nature of what I want to have a chat to you about today. This conversation is general in nature and not intended to give advice. But before we go there, a little bit about yourself. So, mate, I was always intrigued to read that you got 17 years with a planning experience.
I should have looked it up today. I started in 2003. I looked at it.
You like walk out of year 10.
Actually,
baby face.
I might have walked out of year 10, but I was full-time planning while I was at uni.
Yeah.
And so I started doing work experience there, and I set off the fire alarm actually just down the road on my very first day. It was in St. Leonard's.
Yep.
And you can there's a recording of me on the answering machines back in those days, and it was me with a broken voice saying that I'm just the work experience kid as security called. And so that gets played back occasionally as it is recorded. Yeah. But yeah, it has been a fairly long journey, but certainly,
as all good journeys are.
Yeah.
Right? You've learned a lot, and that's been a great tenure in a I'd say an industry that's gone through a lot of change in 17 years, right?
Yeah. So it's definitely very different to where I started and where I saw things being. And I think it's trying to work out things that fit my personality. Like at the start, it was trying to justify how a young person could be in an industry like that. How can you help someone who, you know, you've never had any wealth, you've never built any experience. I think that was what naturally drew me to the insurance, was that, you know, I hadn't achieved much financially. You know, I was starting out, but I could. One of my first bosses, Craig Bigelow, said to me, "You know more about this than they do," and it was something I hadn't really thought too much about. And when I dove deeper and deeper into it, and then tried to get more experience with the claim side of things, which was really important to me. I did pro bono work with the Cancer Council, which got me into that space, and from there, it really narrowed that focus to the insurance as much as I possibly can.
Fantastic. And a bit about yourself. I know you got a lovely now fiance.
Okay. Yeah, so 12 months ago, it was I proposed on her birthday, so it just narrows down dates to remember, which is genius by me. But no, so we're just sort of planning what we do with weddings in this new world. But so that's exciting. We just got our big fur child.
Yeah, your fur baby.
Yeah, I think it's a funny thing to call, but yeah, massive Labrador. He's about 50 kilos.
Wow.
So yeah, no, it's been good. But we're back in Sydney now. We've been sort of up and back between Sydney and Melbourne.
Transition between Melbourne and Sydney. And almost got two homes, don't you? Sydney and Melbourne.
Well, it's been good. I think Melbourne's a little bit different. When we left, we had both COVID, so we thought we'd go through the lockdown in Melbourne, then get away from it, and we came here and found ourselves in another one. But it was very different being sort of near the beach versus Melbourne, which is pretty draconian with the 5K limitation and that sort of thing too. But yeah, no, it's been
not an uncommon move at the moment. People kind of escaping Melbourne.
It's just lost a lot of things that made it so good. You know, sport, music, food. Totally. You take all those things away, and it's just a city that's cold in winter.
Absolutely, chasing the sun now. Good on now. Mate, so I guess the nature of our chat today is really kind of pull the hood and talk about insurance and what people need to know, specifically property investors. And before we kick off, just a little bit about yourself, what I call the 3 Ps. So personally, professionally, and then on a property side as well. What's been your exposure and journey, mate?
Yeah, so I guess we sort of touched on the personal thing.
Yeah.
From a property perspective, I haven't bought before. Yeah. So I've poured everything to the business since when I started.
It's a great asset. Right?
Yeah, I think it was, if I had been able to do both, I would have. So it's a bit of a, you know, I'm not pretending that I would have liked to have done it sooner, but it's sort of one of those things that I just never really been in a position to do it. And we're getting closer to that now. So this year it's where I've been here before, and it's now presenting more possibilities, which is good.
Yeah.
And the third one from what was a personal property?
Yeah. So, and then
professionally.
So True Pride.
Yeah. So True Pride, I started about 6 years ago.
I love the name, by the way.
Well, it was, I had a bad business relationship.
Okay.
So I had a business partner and we split up, and we were really good friends, and it turned into not such a good outcome. And I found a saying that True Pride was doing what you believed in irrespective of what other people felt. Nice. And I thought that was something that was really representative of that and what was happening at the time. But only recently, as I mentioned to you, I've been acquired.
I think congratulations.
True Pride is no more. So we've
well, it evolves, right? I mean, the legacy lives on. It just goes into a bigger and better model, perhaps as well.
So I'm heading up the insurance arm with the team at VIA, which will be exciting, and really looking forward to that challenge, which starts on Monday.
Congratulations,
so,
mate.
Thank you,
Wish
mate.
every success.
Yeah, thanks.
I guess one of the big questions that I want to have a chat about is when I speak to investors, and I mean, most of us feel like we're somewhat bulletproof. Maybe COVID's kind of just brought that back a little bit, going health. I say to everyone, health is your greatest wealth, right? Forget property and assets. So when we talk about the types of insurances, I just want to I want to go back to the beginning.
Yep. Start
with like the 4 core insurances that everyone needs to know. I guess what's pros and cons, and what does someone need to, as a basic, probably have under their belt as well.
Yeah, so if you're looking at the personal insurances, I think the first delineation is that there's the general side of things and then the personal insurance. And I know you had Mitch on recently that touched on a lot of the general side.
Yeah.
So what we look after is the personal insurances. So your life insurance, the total and permanent disability, the trauma insurance, and the income protection. So the 4 have distinct reasons and definitions and those sorts of things. But broadly speaking, life insurance is the simplest one. If you're dead, someone else gets some money. The total disability is if you can never work ever again, you'll be paid a lump sum again. The trauma insurance pays upon diagnosis of a list of conditions. There's about 40 of them in most policies. Right. But if you think heart attack, cancer and stroke, they're the majority of the ones that are there. And the reason that's in place is to take a lot of that financial pressure off at the time of that happening. Yeah. And the income protection's the one that most people sort of go and seem to understand a bit more about at the moment, but that sort of replaces what you can earn from your working life if you're unable again to work. And the way that works is if you have a doctor's certificate, you essentially get paid after a period of time, which is called the waiting period.
Yeah, no dramas. I guess it's just on that point about income protection. A lot of people then think, well, hang on, if I'm getting paid income protection, I can't get a loan. But more recently, we've been able to do a number of clients that have been getting paid income protection, workers' compensation, for example, that can still not limit their ability to get a loan. So
interesting. I hadn't seen that happen, obviously, because we're sort of more on the
you're on that side of the fence. Yeah, correct. Yeah, so I think for anyone that knows someone that's maybe getting income protection or getting workers' compensation, that doesn't stop you from getting a loan. And quite often people just go to one bank, and that bank may say no, but there's many other banks that will say yes. But to go back to your point about the different types, do people cherry pick? Do people go, look, I have a little bit of this, I have a little bit of this, or I have a basic amount here, for example, and then they come to you and as a professional, you're going, well, actually, are they underinsured or are they not insured at all when they thought they may previously have been as well?
Yeah, I think it's definitely a begrudging buy. You know, no one wakes up in the morning and goes, oh,
I'd love to buy some health insurance.
Cannot wait to get my insurance. You know what I mean? It's just not. It's not realistic. Yeah. So it typically happens when there's trigger events, like starting a family, buying a house, taking on debt, those sort of things are when we tend to start thinking about this. And it's generally one of the last things on the list, you know? So you get the house, you get the keys, you get, you know, it's a plan where you put things and a life starts and that sort of thing too. And then you come around to thinking about, what happens if something goes wrong? And then it's, how much do we want to spend on this? And so it's sort of almost done backwards. And so the first thing that I sort of try and talk to people about is we've got a principles-based approach for working out how much insurance you need. Yeah, okay. And I guess that sort of stemmed from me thinking about it. I'm a sports fan. Yeah. And Paul Roos went from the Swans down to my team, the Demons. Yeah. So I can't believe that he showed up at the Demons day one and said, right, what are we going to do today? He's got a plan for taking a team from here to here, and he executes that plan with principles that he has. And so I sort of think about that from the insurance side of things, that if we can have these rules that we abide by, then we can help have a standard approach for people, but come back with a personalised solution, if that makes sense. Yeah, so definitely. I think what I ask permission to do is just have that conversation with people, share what we've found, what we do, and some of the things that I believe in, being having the minimum amount of insurance at all times, and being able to adjust as things change. But one of those big ones are that, you know, if you're single before kids, I don't think life insurance is all that important. Do you know what I mean? If you're spending money on things that are only going to make other people rich, I don't understand why you'd be doing that. But certainly trying to direct the funds that you're investing into this insurance in the most valuable thing that will protect you is the most important thing I think you can do.
I guess I can speak personally, like the outlook on life. I want to go from having no children to now having 2 little girls. I'm like, your outlook significantly changed to go, okay, now I've got people that I'm responsible for and they depend on me and the decisions that I make. So it's about making better decisions at the time, isn't it? And you won't know what you won't know until you kind of cross that bridge, isn't it?
Yeah, I think as well, like there's a lot of people that sit in my sort of role, and there used to be the saying that you reverse the hearse and let people smell the roses. You know what I mean? Like back it up. And I just think that fear selling is one of those things that kind of, you know, you mentioned how long I've been doing this. It was one of those things that went out back in the early days. I think now you can't really hide from information, you know, and I tend to be drawn to working with people that are open to hear an opinion, a logical reason behind things, and then act accordingly. But I think there's going to be always those people that just want to do it themselves. They want to try and tick a box, but we don't realise how important it can be until you really do need it. You know, it's like anything. It's when the rubber hits the road and you need to claim, you really realise how good or bad your decisions have been.
Yeah, great. And that's why I personally feel we've had a big focus on insurances with our series, because it's one of those topics that we need to be talking about, educating people about, and not going, this is a product that people are trying to peddle or sell. They're here to serve. And effectively you can't sell it without someone wanting or needing it.
Correct. Well, you'd hope that that's where it's heading. You know what I mean? Like there's obviously choice. There's going to be people that do it differently. But ultimately I think it's about making a decision, finding right people, and there's so many ways of getting information these days, you know, podcasts, blogs, videos.
I mean, and your videos on YouTube are great. So if anyone's looking to check out some videos of yours,
riveting hours of watching their insurance
love
videos.
a good podcast video series on insurance. I mean, you make it enjoyable, and that's probably another part for maybe a newer demographic or younger demographic. That again, maybe our parents got sold insurance by a door-to-door salesperson, whereas now it's like, hang on, let me find out the person that gets me and what they're about, what they stand for, and connect with someone on that type of level as well.
Yeah. So I guess the thing as well, if you're going down that investment journey with property, that in itself is building a self-insurance or a war chest that you can use as part of your insurance plan. So if you've got equity, you got tons of money and it doesn't matter, then you're in a position that you could self-insure. The hardest one I find with that is the replacement of income. It's very difficult to get that passive income up to a point where you'd have some people, I'm sure, that if they stopped work, they don't need to worry about money purely from their property portfolio.
A small margin, but most people on the journey, once they get a flavour of investing in property, then they want to keep going and keep that momentum going in their own portfolio building as well. The question is when do I reach out to a plan, or when do I reach out to a specialist in the insurance space? Because buying a property, from my experience, when people are buying a property or an investment, happens so quick. So it's all about the property, it's all about the loan. It's happening boom, boom, boom pretty quickly. Then it's like settlement, and then off we go on our merry way. So when is that right time, do you think?
It's difficult because there's no urgency to it, if that makes sense.
Absolutely. Like people need the loan to buy the property, so there is urgency attached to it.
So typically, if it's working, we get referrals from mortgage brokers. That sort of thing happens. But I'll normally say, look, you're going to have so much stuff happen. There's going to be getting the house, having settlement, moving in, doing all that sort of thing too. I generally just try and get it to a place where there's time to carve out for it. So I think, yes, there's a slight risk, obviously. By not having insurance, there's a gap. And the longer that gap is, the more that risk grows. But if you're prepared to take some risk and do it in a time which suits you, I think that's probably the way that I've seen it be most successful. Just taking that time, because it is a bit of an onerous process. There's medicals, there's questions. It's mainly the headspace that comes to it. And if you try and do all of it at once, it's generally the thing that falls out. I don't know what you've experienced, but like you said, you don't need the insurance to get the loan.
And that's exactly it. So it's, I mean, in the UK, I'm pretty sure that it is mandatory, right?
Yeah. So it's different overseas, definitely. And I think, that'd make my life a lot easier if there was a mandate on it. But I actually like that we have choice in certain things. But I do think that finding a time that suits where it can be carved out, get the things sorted, make sure you've got it underway. But realistically, by using someone that knows what they're doing, the input from you shouldn't be that great. Do you know what I mean? Like, so I think we need a bit of time to have a conversation and understand what you're trying to do. You then need to be able to make a decision and then do some questions to get an application done. But realistically, if you invested 2 hours of your time, you'll be done.
Yeah, nice.
Do you know what I mean?
Okay.
So, but I do think it's important to have that clarity of thinking to make the right decision.
And I guess when I speak to people, I'm like, okay, look, we go through our normal fact find, so get our information from our clients, and one of them is, have you got a financial plan, or are you covered for your insurances? I think the default for a lot of people is yes, and when we just quickly ask why, they say, well, it's covered in my super. Is there a distinct difference between what's covered in your superannuation versus what is not, for example?
Yeah, I think the biggest difference between that is that there's coverage and there's coverage. There's the one that you get given as part of your super fund, and we might have it, but the biggest thing is it the right amount? Is it too much? Is it not enough? Versus going through the process and understanding what it looks like for you. So super funds will typically give, and they'll give the default amount of insurance, but by default, it's typically a lot lower than what most people, particularly in the capital cities of Australia, like it'd cover a quarter of your mortgage sort of thing. Of $1 million mortgage, you might have 250 grand worth of coverage. And that could work, but for most people, you'll find that it needs a bit of personalisation and tailoring. And not to say that you can't fund it from your super fund going forward and that sort of thing, but by default, unless you've looked at it, it's pretty unlikely that the coverage that you have in place is going to be adequate because it hasn't been personalised.
And when you say personalised, it just hasn't kept up with your life perhaps, right? So it hasn't kept up with the mortgage that you've taken on, or maybe life changes like getting married, having kids. What else have we got? Yeah,
married, kids, like divorce, those sorts of things come in, business partnerships, all these different things that can happen that we put on the table that come up from there too. But also health events. So, what has happened, what has changed, where things have got to over time as, we're all getting older and we tend to fall apart. So health will change over time. And that's sort of one of those things that you come back to and you look at and go, the earlier you can get it done, the better from a health perspective. But it's also one of those things that it can be changed. But the policies through your super fund is one of those really common ones where you think it's done until you actually have a look at it and is it done to where you need it to be?
Start with this conversation is general in nature and not intended to give advice. So I will throw that in there. We'll probably put that back at the top as well. But we're really fortunate that we've had the benefit of working on a mutual client together. And again, we're not going to give away any names or anything, but something was fairly innocent where I was like, hey, look, if you want to have a chat, they asked for a recommendation. I gave a couple of names and they had the pleasure of reaching out to yourself. And the next thing I get this wonderful email from yourself saying, hey, by the way, we've got them X amount of dollars through a claim. Can you just kind of take us through that journey and what happened to go from having a chat to them to actually reaching out, realizing that they had a valid claim?
Yeah, I think one of the things that I'm really passionate about is trying to have robust conversations. And same as you really get into it. You can understand what you're doing a lot better if you can understand the person. And so by diving deep into it, we look pretty intensely at what's happened as well. So particularly when there's products in place currently. So if you do come and you've got policies through your super fund, for example, like we're talking about before, if anyone's looking at making any changes to that, you want to be pretty certain that you're not entitled, A, to benefits from those policies that are there before they're cancelled, and B, that what you're getting into is actually going to leave you in a better position. And so through that questioning, we just
that's brought quite a few people unstuck. 100%. I think in the Royal Commission, was probably one of the big things that came out was like they did away with good policies, for example, and replaced them with inferior policies or ones that actually suited the planner better than what suited the client as well. So
we spend a big bulk of our time, it looks pretty easy, but the big part of our job is the comparisons and the work that we do behind there. There'd be 4 or 5 hours of work to compare each of those nitty-gritty bits to make sure that it makes sense, So, if it's prostate cancer for men or breast cancer for women, if we're leaving it in a position that makes it worse for you, then I haven't really done my job at all. Right. And I take that responsibility a bit like you do with the loans. Absolutely. Is that jump on board. We've got this process where
trained eye, you know exactly what we're looking for.
And not to say that again you can't do it on your own, but we've been looking at this for a really long time, and I like it more than most. I'm passionate about it, but I'm more passionate about getting the things and the outcomes and making it feel easy, where it's actually a fair bit to it. But one of those things was looking back into what could have been done previously. And for the client that we were talking about before, something that they had in their health past that wasn't overly invasive to them, to the point that they didn't even think to claim on their policies. When we looked a little bit further, going back, finding the documentation from the year that they actually had the diagnosis, we could find that we actually had grounds to claim retrospectively. And we were able to do that and get a check that they weren't really expecting before we'd even done our work at all. So it's a rare it's a rare win.
It's a rare win, but it's still a win,
Yeah.
right? The win to be celebrated, where you go, someone was actually entitled to something, and it just took a professional to get that value out.
I think the thing is with insurance, most people think that it's never going to pay. There's always that the myth that you have in your head, and the stats in Australia are incredible, particularly for the personal insurance, irrespective of whether you go back through your super fund, you call the one off the TV, you go through an advisor. It's more than 92% of all claims in Australia are successful. So
it's incredible, right?
I think the thing that we think about when we think about insurances are your travel insurance not paying, your car insurance wasn't covered, your health insurance, there's excess. But from a personal insurance perspective, you couldn't be further from the point. And some of those ones that don't go through should never have been submitted in the first place.
Right.
So the majority of the ones that are going through are paid out to the amount that you thought it was going to be covered on the policy itself.
Yeah, and I guess when you talk about the DIY model versus entrusting an advisor or someone that's an expert, the likelihood, again, I'm not blowing smoke, but almost to say that going through an advisor, again, like going through a broker, there's skin in the game, which means I'm not going to stop till we get you the best outcome, and asking every damn question that we can, that we're giving this every chance that the claim will get paid, for example, or loan will get approved.
Correct.
As well.
Yeah, and I think that's the thing. It's addressing it up front. If we're not putting things through in a nice bundle, you know what I mean? Like when you're submitting a loan, you
put a pretty bow on top and you go, here you go, bank, I've done all the work for you, and you don't need to think. It's very much, it's all the boxes are ticked. Now you need to approve it. And
because it reflects on you, right? You're proud of what you put forward, and I'm proud of the claims work that we do, because ultimately the experience that comes from there is huge. And I think that's one thing we haven't done very well as an industry, is sort of mention that side of things in terms of, hey, we've had this success, because it's difficult. You can't mention people's names. You know what I mean? Like it's not every day you have a claim and you want to put someone on camera to talk about the mental condition, the medical condition that they had, rather.
Yeah.
So it's not the easiest thing to do. So we've just tried to do a couple of things, put novelty-sized checks and written a bit of a story around it, and sort of thank the insurance company that have done it. So we're just trying a few different things there that have allowed us to share that story a bit better.
And you just mentioned there about, you engage the insurance agency. It's not us versus them either, right? Like somewhat all in it together. So yourself, the client, the insurer, everyone should be on the same page and working to that outcome as well, right?
Well, that's the hard part. And we've seen pricing change, and that's probably one of the biggest things that I'm spending my time on at the moment is dealing with a lot of these pricing increases. And one thing,
premiums.
Correct. Premiums have definitely been rising, particularly in certain areas. So income protection's been one that's been pretty heavily hit.
Right.
And one of the reasons for that is that the claims have gone and been paid out a lot higher than what they were expecting, the insurance companies were. Okay. And also some of the products that they designed themselves were too generous and too much in the favour of you as a customer. And I know that sounds a bit strange, like they designed the product.
Client facing, but
But the insurance companies design their products, they then price those products, and we as customers bought them, and I as an advisor sold them, and now they're saying, oh, look, we didn't price them correctly in the first place, and you're the ones who have to pay. But I guess if you think about it from the perspective of insurance, for those of you that never need to claim, you're actually providing the money for those that do need to claim. Yeah. And the reverse happens if you do need to be one of those people that claim. There needs to be the money there to pay you, and that's where it comes from. So we do have that all in it together sort of philosophy, I think, but it's also important then to make sure that you've got a strategy for only covering the gaps that you need, and not just doing what most people do. They finally get around to doing it. They bought the house, they put their cover in place. Oh, I'm so glad that's done. Never look at it again, and their premiums are 5-6 times what they were when they took them out 10 years later, and they don't need that much cover, because I genuinely believe that your needs will change over time, and that's generally less, as your kids grow up, as you pay down your debt, as things change in your life, you don't need as much insurance.
Yeah.
And if you haven't got a strategy for reducing that, then you're just going to keep overspending.
Yeah. Look, I get blown away by the amount of people that as soon as they buy it, before they even buy the car, you have to, have your car insurance, for example. And now with a lot of banks, when you buy the property, you have to have the certificate of currency or the insurance policy in order to get the final approval and move on. Whereas for us, again, going back to us being our greatest assets, health, well-being, our ability to earn, we don't have that same, same focus or same vigilance around it. Why is that, do you think? I mean, you've spoken to a lot of people about this, and probably some very successful people as well that just don't see themselves as their greatest asset. Well,
I just don't think you think about it, I don't think if you mentioned being bulletproof, and it's one of those things that there's no instant gratification for it at all, like there's nothing that you get tangibly out of being protected. Yeah. It's a peace of mind thing. And what value do you put on that will depend, you know what I mean? But the real tangibility of it only happens if and when something were to go wrong. And it's only a small amount of people that actually claim. Yeah. So, I mean, we would have done about 11 claims last year out of sort of 400 or 500 people. So it's not a
very small percentage. Yeah,
it's not a huge percentage of people. Those 11 people are stoked, right? Yeah. Like they're absolutely wrapped. But I'm pretty sure if you ask the other 400, you know what I mean? Like it's, so glad I paid those premiums for that peace of mind. So given that it's not tangible, I think it's also something difficult to pay for. And so maybe that's it. But I don't know. I just think there's always a horror story about insurance. If you Google any of the insurance companies, the reviews are horrible because...
I mean, same with banks. Like, no one leaves glowing reviews for a bank or an insurer, right? I love paying my bank the interest, for example. Said no one ever, but yeah.
But it's exactly the same for the insurance. You're only going to hear the bad ones. A current affair, only going to pick up the bad ones. Yeah. You're going to hear bad stories about advisors, all those sort of things. And I think that's the nature of the beast. And I guess that's what I'm trying to demystify a little bit is that help. Yeah. Yes, we're an option to get it done. We're not the only one, and we don't work. We're not the right solution. So we're best for those that have more complex needs. So families, if you're before kids or post kids, there's plenty of other ways that you can do it without paying someone to get it done.
Yeah.
And we've got a lot of free tools that you can use. And I've put together a website for the podcast itself. So if you need to grab any of that sort of stuff, it'll all be there. But not everybody needs to get professional advice on the insurances. But if you do, then it can be really beneficial.
Beautiful. Just on that, mate, you mentioned that we've got a resource that we can check out. So what's the best way to get in touch with you?
Yeah, I put it on the personal website, craigbigelow.com.au/API. So I put it on there, put it all together for you, mate.
Beautiful.
Put the tools.
Thank
There's 29 common mistakes that I've found. So I did a 14-page guide on that.
Oh, unreal.
And then also the calculator that we put together on Facebook, which you put in all your personal details and it sends you a report on how much insurance you need.
Mate, how good's that?
It's there for all the listeners.
Thank you so much, mate. Really appreciate it. And I wish you every success. I know that you guys are, True Pride's transitioning and, mate, onwards and upwards, I say, for you guys and Carly as well. Can't wait to see where you guys take yourselves in business, personally and professionally, mate. Likewise. It's been wonderful having you on. And like I said, if you do want to check out Craig on YouTube, definitely do that because it's helpful. It's wonderful information that you're sharing and you're doing a great service to your industry, mate. Well done.
Thanks, mate. Appreciate it.
Lovely. Until next time, you take it easy. And that's been another episode of the Australian Property Investment Podcast. Thanks.